Quick disclaimer, these videos are meant for educational purposes only. Anything said or shown in any of these videos are personal opinion and my perspective. Trading carries a high level of risk, so anything done is your responsibility. Okay, hey, how's it going, guys? Welcome back to mentfx, and in today's video, I'm going to be building upon a little bit about what we spoke last time, which is one, being able to identify the overall trend or context you are within in a given market, within the principles taught here, the 3 box, liquidity, continuations, runs on liquidity, higher time frame, enveloping the lower time frame, right? So again, to very quickly to simplify this for you, a lot of people are going to teach you in a way that makes you disconnect two time frames, right? Even in the retail space, no matter what space you're in, even in the very smart money space, what they'll teach you is to take a higher time frame, do all the fun little analysis here, decide where you want to see price head, decide on the zones, and then what they do is they kind of remove this area, right? So this is the higher time frame now, and then they go to a lower and they just begin to trade this however they see fit, right? They just start entering on anything that sets up, and as a result, what you get is you get a system that falls apart on the longer time frame because this one is not being considered in relation to this one right here. So what I'm teaching you guys to do here, mentfx, is to think from a higher to lower time frame perspective, and to allow this higher to be drawn out for you, made clear, for you to have a contextual approach that makes sense within the 3 box scenario. And then from there, with an understanding of when a trend has, made its potential change, begin to confirm and move in direction of price. So recently we spoke about EU in the last video, so take a look at that. This is currently the weekend, so it's the day after I recorded that one. It's 11/13. And we spoke about the fact that when trends want to actually change, it's usually not the case that we just go into a straight change and just start going. It's usually the case that we undergo formulas of accumulation or distribution, whatever it is that we're trying to do. And as a result of that, we're going to be spending a lot of time going back and forth, invalidating zones, breaking structure, and the untrained eye, or the weak-minded individual, or the weak-minded trader, is always going to get consistently frazzled. Their confidence is going to be shot and lost, and as a result, by the time that a trend has developed and is very clear and is moving in a given direction, and beautiful setups are being presented to them week after week after week, month after month after month, especially on the lower time frames, they're no longer in the mindset to follow that, and they find themselves on the wrong side, trying to once again figure out where the spring of a market is, where the spring of a market is, where the spring of the market is, where the spring of the market is, the spring of the market, the spring of the market, trying to force a low rather than focus on what the market is telling you and continue focusing on the trend at hand when it continues to deliver, until eventually the actual highs that are making new lows from a standpoint of left to right structure, which I also teach on this channel, finally gets invalidated, at which point you then take your personal independent understanding of these markets that you've hopefully tested, data collected, and again, the private mentorship does a phenomenal job at teaching you exactly how to properly conduct data collection, gives you the tools you need to find out your personal best RRs, partials, break-even rules, and everything under the guise of the concepts you use to enter. And those are also taught to you within the section 1 through 3 of the course, as well as the webinars, the live trading areas, the results shared by our members, by our members that have gotten funded, max allocated, etc., etc., etc. So there is a community that is available to you to continue building out that success and that skill set. However, you can also do it for yourself. But if you want to do it for yourself, make sure you are focusing on the correct information. You are taking that information in and then doing independent study of it. So we've learned to walk away from this mentality of, one, forcing any longs in an area that might be already short, and we've also walked away from this, Instagram-based idea where markets deliver beautifully like this. And this is true, and then it breaks and it starts going up. And this becomes true for regardless of whether you're support resistance, whether you're a retail trader or not, because as you all know, most of Instagram, most of education is riddled with this idea that, oh, here we go, perfection trend line, just enter on the third touch of the trend line, while it's also retesting the support and resistance, which is also just fundamentally somehow a perfect 61.8 retracement level. And of course, why wouldn't you know that this is what you do every time and there's a beautiful trade there just to target that insight, something like that, right? That would be maybe something you see on Instagram or something like this, whatever it might be, regardless of where you're learning from. And there's no explanation around understanding what type of market environments create setups like these that might be worthwhile of trading. There's no market ideas there that are focused on the psychology of losses and how losses are a necessity. There's this market focus on not losing or studying those losses. So this is more of a psychological talk that I had with you guys in the previous video, but there's this big focus on doing a lot of the emotional things that keep you emotional and keep you from actually excelling in this industry. So instead, I'm telling you to wipe this from your slate. I'm telling you to focus on one mentor, hopefully, whether it be me or anyone else. I don't really care. Maybe this psychology is all you needed to go and then stick to any other mentor, which is perfectly fine. But if you stick to me, whatever it is, stick to one. And what you want to do is you want to basically dedicate your livelihood, at least give it 3-6 months of just pure dedication to one system taught by that mentor and begin to properly and personally test it. Because as I love to say, the 90% that fail usually haven't even put in 1 to 6 months of proper individual work. And instead, they've looked outwards to get experience. They've looked outwards to gain success metrics from someone else. They've looked outwards for signals. They've looked outwards for a funded account that will just give them enough money so they can focus on really learning whatever it is. And all the time, 90% of the time, these people are going to find themselves consistently losing and never making it anywhere. And usually it's just the people that have chosen to subscribe or to focus on one thing that begin to grow, add small additions, small little pepper flakes upon that growth, and they become significantly more attuned to what they're doing. So with this in mind, something I want to talk about today with you guys is we spoke about this breakdown in the last video, and we spoke about what actually happens when we move from a bearish market into a bullish market in the case we want to move bullish, right? Which means that in some cases, you'll have markets where there's no reason to force longs or shorts because there's only one thing that's actually happening. But in other markets, there's actually areas where the long and short side actually does make sense and can be utilized. But again, you still have to apply these same ideas of trends will hold their own trends even on lower time frames. So right now, when we are in this kind of back and forth where, yeah, we could see the sells down, we could see the absorption of the high into the sells down, into the buys here, into the buys here, into the sells through them, into the new buys and then new buys, etc., etc., etc. When this kind of thing unfolds, we still need to be cognizant of the rules that make us profitable when trends do develop, and not just kind of give into the fact that price might be breaking back and forth and creating this consolidated range and then losing our edge in understanding that when a trend is developed, then it's really going to be developed, because usually after this whole thing happens and it goes back and forth a few times and then it sets up a proper precedence for the move it wants to make, like UJ, right? That we spoke about multiple times. But same thing here. Many people were shorting this market for a long time, right? We finally made bullish breaks, and from this point right here, the mentfx mentorship for a few months was very, very bullish. We were bullish in these areas here. We caught the moves up. Many people caught this. It was beautiful to see. We broke again. We started focusing on these new bullish breaks here. I spoke about these multiple times, so I'm going to do it pretty quickly. We focused on the S&D mitigations here to continue long. We spoke about the 4-hour double MBs or Dow Theory double breaks within here that we then continued to focus on and taking higher based on those S&D points of those ranges. So basic SSC, basic 3-box system, as I teach here on this channel. And from there, we had that overlapping of news injection, of smart money injection, of accumulation having completed. And from there, you had the beautiful markups that we continue to follow through. And now finally, we are once again in this stage that we spoke about in the last video, where mastering patience is leading you to allow this price to do what it needs to do as it transfers ownership hands, as it transfers weak into strong hands, as it allows the smart money to properly distribute or accumulate those positions. But at the same time, that allows for, once again, the weak-minded crowd to get fuzzled out, get confused about what's going on, and then start to stick to the wrong side. So when this market finally decides whether it wants to be a full-on distribution, right, and start moving short, or long, what you're going to see in the retail space is that by the time we've established a very clear and set forth displacement-based trend that is now putting in motion these 3-box systems to the downside, in this case, right? That's what we're looking for. This might go back and forth a few times, but just like on EU, we're expecting it to be moving bullish, but we're expecting it to do it after undergoing an actual accumulation of back and forth breaks, of back and forth SND failures, until it finally takes off into its given direction and starts to put in motion, once again, a beautiful trend that can actually hold and be consistent. On UJ, you have the same thing. I expect right now that we're probably going to play around back and forth for a while until we put in this clear trend. And what's going to happen is these weak-minded individuals that haven't tested their system over years of data, that haven't experimented and understood how markets tend to move when it comes to currencies, what's going to happen is when this happens, they're going to be in the same mentality now of trying to catch the spring movements of this downwards moving trend, right? Trying to catch that low every single week, every single month, every single year, finally getting a pop until it just continues and continues and continues. And you're going to get the same thing that you saw over the last few months with these trends here. And again, I've had a number of you reach out to me on Instagram, show me some of yourselves getting funded, your own analysis, just talking about and catching this all the way down. As at the same time, I saw a number of you sending me other mentorships you're in that consistently try to basically make you a buyer or tell you they're buyers at all of these areas here, at all these demand zones. Everybody wanted to be a buyer, right? Many buyers, buyers, et cetera, et cetera, et cetera. So we know and we've seen that in the space, and this is true across the board, that there are people nonstop that are constantly looking to be on the wrong side, because once a trend develops, it usually happens after a long period of structure and SNDs or zones and support resistance, whatever, failing back and forth. And what happens to the weak-minded is that when you in the short term see that happening, you expect that to happen long term, which means when a real trend comes into play, and now the real trend followers, the real 3-box mentfx methodology followers that know they need to follow the trend, have finally come into the condition of a market that can follow the trend in. Those that are weak-minded, that have gotten very, very used to the fact that prices clearly always go back to the mean, end up failing. And again, you can go and read your own personal studies, books, whatever it is, and you will learn that what this is basically called a mean reversion strategy. And most of the time, a mean reversion-based strategy tends to fail long-term, because even though on average, a mean reverting strategy will revert to the mean. That's literally what it means. Mean reversion means that on average, prices revert back to certain areas. On average, eventually, you're going to get the outward pinnacles of that, right? So what's going to happen is trends are going to be established, and now those mean reverting plays are not going to happen. So someone that's being positioned for the few months where this plays back and forth and makes breaks up and down, S&Ds are failing back and forth, and they get lost in that entrapment of, oh my God, price is so beautiful, I can just keep trading it back and forth. When that happens, and then it finally breaks out or starts moving in a trending environment, every single person is looking for a way to trade the mean reversion bounce, spring test back up into a zone, back up into an unmitigated zone, back up into an unmitigated supply zone, back up into a martingale position, et cetera, et cetera, et cetera. And that's why over the last few months, you've seen me making videos about how bearish this market has been and how it hasn't changed. And I've been telling you guys to pay attention to the market from a left to right structure to know when it's actually ready to and wants to change. Many people were on the wrong side. And now we're coming to that same turning point where we are probably going to undergo a number of back and forth transitions between structure holding, structure not holding, S&Ds holding, S&Ds not holding, back and forth working, right? This whole consolidation idea, mean reversion working, and the weak-minded are going to fall into that again. So when the next trend comes along, you already know what most people are doing as it's showing you what it wants to do. Right. So recently, what I was going to talk to you guys about today is of course, if we go to EU again, right, and we just take a look at what's going on here coming into next week. I've already spoken with the private mentorship about what I'm looking for and how I'm looking for it, and I broke this down with great depth in there. And I will be making more videos on this once we get back into the swing of things. Let me delete some of these. But why I wanted to talk to you about this today is that you have at your disposal a number of pairs markets available to you that actually could be in conditions that are worthwhile for you to be trading, that are much more clear in terms of what's going on. Now, I'm going to be honest with a lot of you today. I personally trade EU mostly all the time. However, I also prefer to trade contextually applicable markets. And what I mean by that is I will sit back and I'll be patient and I will wait for a market that makes sense to me, that makes sense as to what I've studied and understood about markets, trends, structural continuations, all this fun stuff, and wait for optimal criteria to be met. Just like right now on EU, I'm uncertain about exactly what it wants to do. All I know is it probably wants to accumulate over a longer period of time, probably about 3 to 6 months, most likely. And I believe that, over the next 3 to 6 months, we're going to stay around this area until we finally accumulate enough positions to start a new 3-box continuation that begins to actually, get fueled and then take itself higher. However, until then, I have to be willing to sit on the sidelines or wait for high probability setups. And what I mean by that is, unlike during this market right here, that was clearly showing you what it wants to do, and then you can complement what it's showing you on this higher with the lower by going to the lower, waiting for your liquid session to come in, and as that liquid session has, continuations that are already bullish, and as that liquid session comes in, it begins to clearly displace and break down. You can already use the 3-box setups to go short, or, this would be scenario 1. Scenario 2 would be that you have the same bullish market, whatever, it's coming bullish, it comes into the bearish market, into the liquid session, starts breaking down clearly, maybe even from a higher time from S&D, starts breaking down clearly, maybe breaks up, breaks down again clearly, and then finally pulls back into a 3-box that you were patient about, that you waited for, and then continues to deliver short, right? This is exactly the model right here, scenario 2, but that I followed on a lower time frame in collaboration with my higher time frame analysis on the higher, knowing that it was short, to catch my personal best that I've ever caught in my life, which was my 403 RR trade, which, by the way, was partialed all the way through. I believe my total secured RR on that trade was about 30 something RR as raw RR that I secured, and that happened inside of here to this exact low where I spoke about a few times with you guys, was the 12-month S&D, right? So in the context of the market that is extremely clear to me and has been telling me what it wants to do for months on end and hasn't changed, and that is changing right now, but hasn't changed before that, I used my lower time frame understanding of what's going on to continuously get involved using a very simple model. Now, what's interesting is in these specific conditions, that same exact model just applied over and just entered over and over again is probably going to fail more often. And this is where this idea of edge is derived from. When you understand the specific edge that your system has and the specific times or market conditions that allow that edge to really glow and flourish, then you start to just you start to really exercise patience. This comes back to the same thing I speak about a number of times, which is, a lot of stupid emotional mistakes that people make are very, very easily cured, right? So the cure, the little vial of cure, you want the little cure? The little cure is experience. And if you allow yourself to undergo proper experience, proper independent study, what happens is all these dumb little emotional problems that people want fixed for themselves, that they need a book to fix for themselves, that they need a new Instagram reel with the little music jingle jangle, or to fix for themselves, or the next book that they can read, or the next mentor that can fix it for them, they start realizing that it's not about the person or anything on the outward, right? The stuff we talked about in the last video. It's all about the inward. It's all about recognizing for yourself from an experience-based standpoint what conditions meet the confirmations you look for. So at this moment right now, I wouldn't want to apply this scenario 2, which is what or 1, right, where we come into a session, we get a clear bearish displacement, we start getting involved like I did during this entire bearish market. Instead, we need to be much more careful with the zones we pick and the structure we use. And how do we do that? Let me give you examples, because I don't just want to say that for you. Well, I'm going to give you a quick example here. Currently, because we've started to shift back to the bullish side and made an actual bullish break from a standpoint of left to right structure, we actually have a number of things that's going on. On the one hand, we have a weekly range from this high to this low. This is box 1, right? Box 2, right here, which I've refined further to this daily box here, which is based on the double MB rule as I teach in the mentorship, which I'm not going to break down here because, again, there's a lot of depth to it, so I'm not going to even try, but that's the link in the bottom, mentfx.com, or in the description, so check that out if you want to. There you go. That's my little sponsorship for the day. So we're still in this idea of a bearish market, but at the same time, this daily that has continued to hold itself down and come into 3-box setups and continue fueling down has begun to change, and it's begun to shift slightly, right? And at this point, what we're seeing is the first kind of daily break up to the top side from a left to right standpoint, and that's coming from SNDs in here and lower SNDs as part of new lower time frame 3-box systems and setups inside of here. So we're actually starting to have bullish and bearish S&Ds met in this market because it's no longer a trending environment. Instead, it's an environment that may, as per what I believe and as what I teach, consolidate until it begins to put in a proper accumulation for a real run up that it's going to come in later, right? So basically, kind of imagine what happened on UJ right here. Right, so what happened on UJ from back here and here and here, as we spoke about multiple times, until the actual run up. I think the same thing is going to happen here at the bottom, where you have the back and forth that happens for a while until that money steps in, the money comes in, the 3-box setups are given to you, the smart money enters, the news follows, and then you have proper explosions to the top side. So what UJ did over the last, basically few years is what I think is going to happen on EU now to the top side as well. Once the accumulation that needs to undergo has undergone, right? So that means that during this time, I can't just be getting on a lower time frame and randomly trading these clear setups that might be happening during sessions, because now we have S&D still on the top side and the bottom side as part of a multi-time frame, right? So again, think about the higher in the lower instead of separate. So we have these higher and lower time frame S&Ds that are meeting themselves on the top and bottom side, which means we need to be a little bit more refined about our entries, and we need to start confirming when we get to these areas with the awareness that, once again, they're most likely to fail. So applying the rule of 30 here, applying further confirmation, applying more refined areas to allow ourselves to be wrong once or twice, maybe not even take any losses and have it invalidated. That's the kind of market condition we look at. Or the other option is in cases like these where, you have these bullish and bearish zones and you're not exactly sure which one you might want to look at, or if, price is just here and what you're waiting for, at least for me personally right now, into next week, I'm just waiting for a break of this low, right? If I'm not getting a break or displacement of this low that I can then begin to retrade as 3-box systems back down, right? Or maybe it just keeps going, or maybe it just keeps going up. If I don't get the specific break, so this would be the only scenario I'm looking for, with a retrace back into the S&D that I could actually trade with a lower time frame, and then follow that, in this case, 1 hour, 4 hour trend off a lower time frame continuously down into an S&D here, and then lower based on management. If I don't get that, there needs to be a level of patience I exercise and step back. So when market conditions like these present themselves and they're not completely clear as they have been over the last few months, right? And by the way, all these markets happen and they're going to happen again and again. So don't worry that you miss this, this trend. It's going to happen again and again and again. It's going to set up again. But what you can begin to do is look at other pairs that are in these zones that you already want to confirm that are much more clear to you. So I'm going to give you guys a little bit of webinar mentorship sauce. So again, like I said, this is a Sunday, so this is what we released in the webinar and shared with the people. But on Euro GBP, as I was conducting my analysis, this is something that looks very, very clear to me, and this is something that I'm going to trade into next week, and this is how I do that, right? You have a higher time frame here that went back and forth for a while, right? Put in a bullish, put in a bearish, kind of what kept going back and forth, and then made this bearish break, and it's coming up into this area now. So it's also a little bit of a consolidation, but I expect this to continue short into these liquidity points here, right? And as a result, as I step down time frames, so we're gonna wrap this up because I don't know if you can hear my baby crying, but we have to get out of the house soon. As we step down a few time frames, right, we have these breakdowns, and as we tap in to this 50% of a higher time frame S&D that's already showing me bearishness, and then from there we get clear price that moves directly away from it and begins to break down structure on the top side while leaving behind unmitigated S&Ds, thereby putting in motion box 1, box 2, and what I expect to be box 3, hopefully. We put in motion the same context that we've had on these other beautiful markets over the last few months on this market. So now what happens is, coming into next week, all I know on this market is that I want to see price continue to take out this next low as part of the 3-box, and hopefully continue even lower to take out the higher time frame low here. So what I've done is I've exercised patience on one pair, and as it's kind of exhausted its options and kind of entered this more static state of back and forth, I can prorate my continuous understanding to another pair, find it within a market that has a context that is worth trading for me, and now using those same scenarios I showed you as we come into a session or whatever, and we're looking for the clear breakdowns of either the 3 box in terms of Wyckoff or our other confirmations taught in the mentorship. As we get those and we follow those 3 box on those lower time frames, that could be anywhere, even in here. Like next week, it could do something like this, and I could get a trade right here on my 5 minute, 15 minute, 1 minute, whatever it might be, and take that lower to these points and these points. So the point of this video is to make you guys focus on patience, exercising patience, and understanding the markets that create the best opportunities for you. And then when you understand that, you can prorate that understanding from a market that might be less amicable, or a market that you have less understanding or confidence about, and prorate it to something that makes a lot more sense. Like in this case, EG does to me currently. So does GJ, but I'm not going to break that one down for you guys right now because that's reserved for the private mentorship. And like I said, I usually reserve a lot of these things for the private because I can upload those and, you know, I can go into real deep analysis. But what am I going to do next week? Well, instead of following this EU back and forth, you know, because we haven't even broken this low yet, all I would do is set an alert here and wait for it to either show me it wants to potentially break down a little bit further, or let it do what it needs to do, because I'm not here to get into every move, right? Remember, our edge is in the 0.1% of moves that happen in this market, not the 99.9, which means that most of the time when the markets have huge markups and downs and markdowns, it's not about being in them, right? It's always going to come down to executing your same rules over and over and over again in context that makes sense. And when the context isn't there, or the setup isn't there, you need to be able to prorate that same understanding, the higher to lower, the left to right, all the stuff that we teach here, the 3 box, the continuation of 3 boxes, understanding how they continue, how sessions influence what we do, how liquidity comes in, how breakdowns occur, how markets move in terms of the 3 box, what I teach you guys here, and then apply. So as a little bit of a cookie about what I'm going to do personally, because of the market conditions, I'm going to be looking at EG to follow it short and continue following it short until it shows me otherwise, right? And again, the beautiful thing about understanding an actual system of SSC is that if this zone doesn't want to hold and this zone doesn't want to hold, then I'm fully wrong. The beautiful thing is you are still held together by the fact that you have 3 steps to get yourself in. And even when these are all met and you might even take some losses or some wins, you have M, the beautiful M, the management that keeps the system together. So for the end of this, focus on markets that are favorable to you, on the contexts that are favorable to you, that provide you the opportunities that are favorable to you as well, and follow an actual system without getting concerned with the superficial Instagram posts and stuff that you get from Lambo owners that tell you that you need to focus on those losses. You can't take losses. You got to get the high win rate, and you're going to find yourself excelling. Thank you guys. I'll see you on the next one.